We'll just disrupt this programming for some breaking news appearing on your screens. On Zee Entertainment, it's official. The news is out. It's Invesco Oppenheimer Developing Markets Fund that is going to be buying an 11% stake in Zee Entertainment. This is something that has come bang in line with, of course, the guidance given by Zee Entertainment during the first quarter numbers as well, that he will be announcing that stake sale and the stake divestment by the 31st of July. And now it's official. What exactly are the valuations like is something that we would like to take a look at. But, 11% stake, which means out of the 34,000 odd crore rupee market cap, it's around 3,800 crore rupees worth that has been sold. 4,224 crore rupees is, of course, what the valuation is, and it's obviously definitely at a premium. The question is, of course, how much? But yeah, roughly a 15 to 16% premium compared to the current market price is what the promoters have sold. Remember, back in September 2018, they had initiated the process of divesting its key assets. To talk more about this news, we have with us Karan Taurani. Hi, Karan. Good evening. Your initial reaction: 11% finally sold. Invesco is the buyer, and the price point is, the valuation is roughly at 4,200 crores.
So firstly, in terms of the price point, no major positive surprise. We were anyway expecting not more than a premium of about 10 to 12%. So fundamentally, we have basically accumulated rating on the stock and at valuations of about 20 times PE based on FY21. At 404 times the stock basically beats out on a fundamental valuation basis. Secondly, a very big negative surprise that only 11% of the stake has been sold and not the entire promoter stake. So definitely, I think more negative. Basically, the deal was just delayed for almost about 5 to 6 months now. And despite that, we just got one investor on board who just bought about 11%. If you see in terms of the debt was for Essel Infra, I think it's more than 15 to 16,000 crores, and out of that, around 9,000 crores roughly was what Zee was supposed to repay, Zee Entertainment, the entity. So I think still quite some time more, still we can take a call on this. But as of now, it looks very much as a negative surprise.
Okay, mostly negative according to Karan. And Karan, in fact, like you're saying, only one investor and only 11% stake. But I think as per what my colleague Gavan, the fund has already been a financial investor in Zee Entertainment since 2002. So it's not like they have received, interest from some outsider party or anything like that. Though they do claim that they had received positive response from multiple partners who expressed their interest to buy this stake in Zee and other key non-media assets as well. No update on that front at this point of time. On the valuation front, Karan seems to be pretty neutral, nothing great. So all in all, Karan is, of course, reading into this news as negative simply because only 11% of the stake has been sold, whereas the promoters actually wanted to sell the entire 36% odd stake that they hold, in Zee Entertainment. Okay, we have Sanjeev Bhasin as well joining in. Sanjeev, largely, do you believe that, like Karan flagged off, out of the 35.8%, only 11% is what they have managed to sell, is something that you would be focusing on as a key negative, as opposed to just the deal going through?
Well, I think it's at least a start, and they had said that they would divest at least 50% of their stake. Now, they own about 36%, so that would have been 18%. Getting an 11% investment to be done will give them at least it's a starting point. So I would say in a difficult environment, they have managed to, at least go with this 11%. Soothen some of the nerves. There has been issues on payback and, the mutual fund stake. And I think those should allay some of the fears. Now, further equity dilution will depend on market conditions and so on. So I would say that in a difficult market conditions, they've still managed to meet their, obligation, which should reasonably go down well.
Right. Sanjeev, wanted to get in your view at 4,224 crore rupees. This is coming in at a significant premium as well to the current market price. Do you believe that, in terms of the overall valuation and the debt component that they have, which is close to 13,000 crore rupees, that this is a fair number?
Well, yes, I am not fully aware of what the premium is, but it's definitely a premium to the 6-month average, about an 18% premium to that. And for a brand like Zee, you should be definitely looking at that much. Now, We know that the earnings, the company's performance, even in the last quarter, was very impressive. And it's the temporary debt obligation which the promoters have said that they are laying out a plan. They took up till the end of September. They've taken time from as a moratorium, and they've at least started the show. So I would say it's a temporary reprieve and a positive, given that out of the debt overhang of around 13,000 crore, 4,500 or 4,300 would be met. So I would take that as a positive.
Vikash Mantri as well joining in, and Vikash, 11% stake from Oppenheimer. This is a financial investor. There was buzz going around. Strategic investor would have been in the works at a price point at a consideration value of 4,224 crore rupees. How do you read into the deal?
So I think the market was waiting for this deal to happen, and finally that we have a deal that's a positive news. However, the quantum of amount that is getting sold will not be enough is what I gather, because initially at least the promoters' interest was to sell 50% of their then holdings. When they announced the intent to sell stake, they had around 42%. So the idea was to sell close to 21%. So selling only 11% as against the 21% earlier would mean that it will only solve some of the debt problems. So we need a further guidance from the management promoters saying how will the other debt portion be managed, and maybe an outlook on what has happened over a period of time to the other assets that they had put into block and how much money they would have raised from those. Those will be an important factor going forward. But clearly a deal happening because the management or promoters were running out of time. It's a positive. Also, a financial investor coming into the situation is a better outcome, as we have always said, as compared to a strategic, because strategic investor would have his own interest and his own path. Clearly, the ZEEL management, ZEEL promoters were doing a good job as compared to running the company. So that's good that the promoters will continue to maintain control with just parting 11%. But as I said, the key factor is what happens to the remaining amount that needs to be still paid off for the debt holders.
Karan, would you to a certain extent agree with that point that Vikash made as of now, the fact that a strategic investor would have then had interest of their own, and then the overall promoters wouldn't be able to have their management control, which is something perhaps that the street wanted. So in that light, the fact that it's a strategic investor can be seen as a positive?
To some extent, yes, but again, no, because the thing is, anyone who would be coming on board right now in terms of the consortium of the funds or the financial investors, they would definitely have a major say in terms of how they want to run the business. And usually these financial investors are basically more in terms of looking for revenue growth and that kind of a story than the margin protection. So if at all the interference in the business is not there, then definitely it's a positive. But my guess is there has to be some kind of interference from these financial investors as well.
Vikash, I know you brought up the point about it being a financial investor, which is a bit favorable in terms of the promoters holding control. But do you think they could also at this stage explore a strategic, investor? Would that be something that the street would want to hear as well? Because as you said, this is only an 11% stake. They earlier own about 7%, so that's 18%. And earlier on, they had suggested selling close to 50%.
So I think now strategic coming in is out of the question, given that 11% would go on to the financial investor, and Oppenheimer will now have a significant stake in the company. See, personally, I was never in favor of a strategic investor because there was little that one could think that a strategic investor could add value to a group like ZEEL, which was almost managing everything on its own and present in almost everything and doing a fine job. So a strategic investor would only mean that it would have given the idea at that time presented by the promoters was give it a global footprint. And I never wanted, or at least there was not much value in getting that global footprint. In case of ZEEL's distribution that can be managed without a strategic partner, they're just doing limited tie-ups with strategic partners only for that asset. So I think now we don't need a strategic partner. A financial partner will be good enough at this point of time. The only question which remains at top of investors' mind is how is the promoters' complete problem solved by this amount of stake sale?
Yeah, that still remains a bit of a question mark. But for sure, Karan, the debt mutual funds are going to be heaving a sigh of relief that the company did adhere to the timeline. In the nick of time as well has announced this deal. Given their exposure to a lot of these funds, do you think that that is going to come as, a big weight off their chests?
Definitely. I mean, they are going to basically, be happy with what's happened so far. But as, we mentioned, the outlook is what we basically await, and that's going to provide more clarity and more respite on this. And, we are today in an environment where we are competing with global giants like, Netflix and Amazon. They are spending big amount of money in terms of content. So in my view, I think a strategic partner would have been much more better because they would have got the content synergies, they would have got the content library with them, and there could have been a bundle offering like how Disney Plus is going to have with something like a Hotstar. So, that would be a better positive surprise than a financial investor, because in terms of value add, in terms of market synergies, in terms of competitive intensity, I don't think financial investor will solve any of those problems.
Just going to tell you what, Mr. Puneet Goenka, the Managing Director and CEO at ZEEL Entertainment, has had to say about this deal. I'm extremely glad to share that the fund as a financial investor has further reposed faith in ZEEL Entertainment. It gives me immense pleasure to note their strong belief and trust in the intrinsic value of our precious asset. It is a valuable belief and support of our esteemed financial investors that enables us to consistently generate great value year after year. Sanjeev, this is definitely, a much-needed step that was awaited by the street, and it's come about, as you said. Let's talk about the strategy going forward now for ZEEL. They will be able to, sort out a lot of the debt component. Corporate restructuring will be able to be done to a great extent. What do you think now is going to be the way forward, given that there is a clear silver lining?
Well, at least it's, it has soothed a lot of nerves, and what the management had promised by end of September, they've started to deliver. Now, they told you the other bid would have been from a strategic investor like Comcast, and that would have meant change of control and so on. So I think the present management has been very efficient in running the business, and I see no let up in that. In fact, it should strengthen now, given that there is a financial investor. And, it also puts at rest all the bonhomie about negativity about India on a lot of counts. There are people who are ready to put their money where their mouth is, and that should be a positive. You also know that Ion Capital is looking to buy a stake in DHFL, where it should get run. And if 2-3 things like these deals get done, I think it should reinstate a lot of confidence back in the market. We've been dealing with a lot of issues on FI taxation and so on. And it tells you that smart money is going to buy assets whenever it gets the opportunity, which is the broader message. How he handles the rest of the debt and the overhang, I think it will only be on a step-to-step basis, and we'll wait for the management to give us more commentary on that.
Commentary will be awaited. In fact, there's a conference call fairly soon. Vikash, just to get in a view from you as to now what this is going to mean for ZEEL Entertainment. The stock has been a severe underperformer at the receiving end of selling pressure, owing debt mutual funds something like 7,000 crore rupees. Overall debt component as well was a big negative. They had said even their investments in D2H, Videocon D2H, their infra assets, all of those overhangs. Now, with this news coming in, what's the call on the stock at 361?
Clearly, the valuation or the stock call recently had just become a function of the promoter's debt situation. And this is despite ZEEL performing very good in terms of financial numbers, the stock was a victim of just the promoter's debt situation. So going forward, that problem reduces. I'm not saying it completely goes off, as we said that it is still not solving the complete problem, but at least that hangover, which was very high, and at least there for the last 6 months in significant pressure on the stock, that goes away. So clearly it should mean positive going forward for the stock. I don't have a rating or a target, but only thing is it at least removes those dark clouds which have been hanging for quite some time.
Vikash, at the risk of sounding repetitive, I'm not sure if you have addressed this, but just a concern from my side. When in September 2018, Zee's promoters had flagged off new trends that are coming around, OTT, etc., they had said that they are looking for an investor who would enable them to help develop all their digital platforms and, the new course that media is taking. So would you be concerned that we simply are now looking at a financial investor who already has a little over a 7.5% stake in Zee Entertainment even before this? Do you believe that this is not exactly value addition for Zee?
See, yes, clearly if we go from the September 2018 announcement, it clearly looked like that Zee was wanting to sell 50% only for a strategic partner, so to that it can get a global footprint and maybe also some support for its digital venture globally, which is the ZEEFi platform. However, we knew by the period of Jan 2019 that this entire reason why they wanted to sell stake was maybe less of that strategic reason and more because of the promoters' debt situation, and that took the limelight. So one would say that the intent to get a strategic partner was more a function of the debt issues of the promoter, and that is why it was nicely put in front of the investors. Frankly, to me, I would prefer a stake sale, and a financial partner out of this situation is a better option because it retains control with the current promoters who have done a relatively very good job in case of running the company. However, one needs to question the promoters that when the intent in September was for a strategic partner, why this financial partner only? But I think the answer is there because in the last 6 months, the commentary had become that either a strategic partner or a financial partner. And I think the urgency of the deal was much more important rather than whether who is exactly the partner that is there. Also remember, the strategic partner could have come who would have completely just helped the business, or it could have been somebody who could have changed the growth path of the company. So keeping control was also equally important.
Okay, that's certainly a very interesting point you mentioned, Vikash. Probably painted in a more prettier picture back in September, but of course the narrative changed as more things emerged, especially with respect to the debt situation on the promoter group front itself. Sanjeev, from now on, what would you be then watching out for from Zee Entertainment in terms of the narrative? And of course, if you let's say had an opportunity to ask Zee Entertainment questions, what would you like to pose to them?
Well, I would like to be waiting to hear more on the further plans of how the rest of the money is going to be raised. And at least they built the cat in the sense of culminating one part of the deal. 11% stake for 4,200 means a 18% premium to the 6-month price. It's been worked out well. The underlying fundamentals, these numbers were way ahead of what the street estimates were. And we think pessimism is at its highest. I think from next month onwards, ad revenue and ARPU should only be on the better side. In fact, yield should improve, which means the working of the company gets a lift, the debt overhang reduces, and we will know more from the game plan. What I would like to ask them is, what is their outlook on the overall scenario?
Sanjeev, apologies for that interruption. The conference call underway. Let's cut across.
Oppenheimer has agreed to make an additional investment in our company. The fund has agreed to buy up to 11% stake in ZEEL from its promoters for a total consideration value of up to rupees 4,224 crores. This development is a strong step in the overall divestment process, giving the promoters the required financial fillip to initiate the repayment process. Along with Zee, Essel Group is also in the process of divesting its stake in some of its non-media assets. Buyers for the solar power and road assets have been identified, and the deals are in final stages of conclusion. Essel Group is confident that the sale of its non-media assets, along with sale of stake in Zee, will enable the group to complete the overall process of repayment well within the agreed timelines. With this, I would now like to address any questions that you may have.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star one. We have our first question from the line of Abneesh Roy from Edelweiss. Please go ahead.
Yeah, Puneet, congrats on this development. My first question is, will there be any more...
Mr. Roy, your line is unmuted. Please go and ask your question.
Yeah, congrats, Puneet, on this development. My first question is, will any more stake sale be required in ZEEL in the near medium term? Why I'm asking this is, post-tax you will get around 3,000 crores from this, which is much lower than the overall debt group faces. I understand the non-media assets, but if you could elaborate on this.
So, Abneesh, as I stated in my opening statement, that with the sale of the non-media assets, there may still require to be some sale of the ZEEL stake to completely settle the entire debt. But I'm happy to report that with this deal, at least the floor price of the ZEEL stock has been reset.
And Puneet, you mentioned up to 11%. So what does that mean? And second, whatever left would need to be sold in ZEEL, would that be to Oppenheimer only, or that could be some other fund?
So when I mentioned up to 11% stake, Abneesh, that means that we have to engage with the lenders now who will participate in giving these shares back to us for sale to Oppenheimer. And therefore, we have agreed with Oppenheimer that, up to a maximum of 11% is what they'll be buying. I am pretty confident that I'll be able to get the entire 11% from the lenders, given the price that we've established. In terms of additional stake, I think it will be marginal. It will not be significant, and the family should be left with a reasonable amount of stake in the company.
And that was the second question. Is there any conditions attached here on the management control, on the management team?
No, this is a pure equity transaction. They will just be a public shareholder of the company.
My third and last question is essentially on the timelines and your confidence on meeting that. So the September end timeline, so which means only 2 months left. Now we know currently the situation in the market. So in that context, the sale in non-media assets and the overall timeline, if you could elaborate, there's any change to the timeline, and are you confident of meeting the balance part of the debt repayment by the non-media and the small stake sale in ZEEL?
Absolutely, Avnish. I'm very confident that we'll complete the entire process within the timeline of the next 2 months.
Okay. Thank you, Puneet.
Thank you.
Thank you, sir. We have next question from the line of Kunal Vora from BNP Paribas. Please go ahead.
Yeah, thanks and congrats for the deal. Just wanted to check, why did it not work out with a strategic investor? Was it valuation, or was it control of the business which promoters wanted to retain?
No, Kunal, the biggest reason for it not working out is the timelines, which would not have enabled us to pay back to the lenders in the timelines agreed with them. The strategic partner would have taken a lot longer to conclude the deal with us.
Yeah, but weren't you very close to getting a deal done, like say early this year? What went wrong?
Several things went wrong, Kunal, starting from the Black Friday of 25th January. That derailed the process significantly. And then people wanted to wait and watch what happens in the general elections. And that's what has taken, these two events have taken a lot of time away from us. But having said that, we still waited for the strategic partners' offer to come in before we took this decision. And having looked at both the options, we took a conscious call that if we have to adhere to the timelines of the lenders, we will have to go down the financial route.
Sure. Just last question. What will be the pledge level for ZEEL Entertainment after the deal?
I'll have to work it out and come back to you, Kunal.
Sure. Okay, that's it from my side. Thank you.
Thank you. We have next question from the line of Kapil Singh from Nomura Securities. Please go ahead.
Hi, Puneet. Congratulations on the deal. I wanted to check what is the outstanding loan amount against the pledged shares?
The total outstanding amount against the pledged shares, Kapil, which includes all of our listed companies, is approximately 11,000 crores.
Okay, and specific to ZEEL Entertainment?
They're all crore collateralized now, Kapil, so it's all in the same bucket.
Okay. And second, I wanted to check, has there been any kind of due diligence done by Oppenheimer before doing this deal? And is there any holding period that they have till which they can't sell?
So, Kapil, they have done due diligence over the last 17 years on this company. They've been shareholders for 17 years. In terms of holdback, as I said earlier, it's a pure equity deal. There is no holdback that we have put on them because that would imply then making it a conditional deal.
Okay. No, I understand that on the due diligence, I was asking if there is any additional details that they have sought or any kind of due diligence process they have run prior to this deal.
No, they have not.
Okay. Thank you. That's all from my side.
Thank you. We have next question from the line of Yogesh Karve from B&K Securities. Please go ahead.
So thanks for the opportunity. So the standstill agreement that we have with the lenders, so that provide for settling all the dues by September or only the portion falling due by September?
All of it by September.
All of it. Okay. And secondly, this loan against shares of 11,000 crores, so that compares to about 13,500 crores what we had in January and February.
Correct.
Okay. Fine. And regarding the sale of the infra assets, so are we confident that could be concluded by the September deadline, or we are banking more on the ZEEL Entertainment shares to settle the dues?
As I said in my opening remarks, that is going to be also possible within the timeline. But if there are any delays, then we will step it up with the Z stake sale.
Okay. Sure, sir. That's all from me. Thank you.
Thank you, Yogesh.
Thank you, sir. We have next question from the line of Jay Doshi from Kotak Securities. Please go ahead.
Hi, Puneet. Congrats on this announcement, and thanks for the opportunity. My question is, are you currently also engaged with any other investor for further stake sales? Because you mentioned that you looked at the two options and decided to proceed with this one because the other one would have taken time. And second is, you mentioned that this sets the floor price. So is there any understanding with Oppenheimer that you would not do further stake sale below 400 rupees, or that was just there's no such agreement?
No, there's no such agreement, Jay, but I am pretty confident that once an investor like Invesco Oppenheimer is buying 11% stake at a certain price, that validates that value. And therefore, anybody else who may look at Z can't really question it, and that price should be very easily sailing through. Sorry, what was your first question, Jay?
Are you currently engaged with any investor?
Yeah, we keep getting approached by multiple parties all the time.
Understood. And another question is, now with this 11%, Oppenheimer would probably be hold close to 18-19% in the company, right? So have they sort of, are they interested in board seat? Will there be any board seat for them, or not required? Or not?
No, there is no board seats. Our agreement doesn't call for those rights. They are a pure equity public shareholder.
Right. And final one, just a bookkeeping one. What will be the taxation applicable for this stake sale in terms of...
We'll talk to the corporate team and come back to you.
Sure. Thank you. That's it from my side.
Thank you.
Thank you, sir. We have a next question from the line of Rohit Dokania from IDFC Securities. Please go ahead.
Yeah, hi Puneet, congrats and thank you for the opportunity. I had 2-3 questions. One is, totally appreciate the fact that you went with a financial guy versus strategic on timelines. But will it be possible for you to share whether the value that the strategic guy was trying to assign to the business, was it higher or lower than, what Oppenheimer has assigned?
I'm bound by confidentiality, Rohit. I can't share that detail.
Okay, understood. The other thing that, I wanted to check was, as far as the sort of, so you did allude to the 11,000 crores odd kind of, LAS, out of which post-tax probably you would be receiving just about, 3,500 odd, maybe crores. So will the equity value of the other, assets that you spoke about, which is road, solar, etc., will it be enough, or do you think that there could be a chunky sale of, ZEEL Entertainment again to ensure that, we pay by September?
So, Rohit, I think let's talk for a minute on this taxation. Back in November when we decided to do the stake sale of ZEEL itself, we had done extensive tax planning. Whether it be to a strategic or financial, the tax planning is applicable for both. And the tax leakage in this transaction will be very, very minuscule. So therefore, a large part, if not all of it, realization should come into the hands of the promoters. Having said that, with the non-media assets, I don't expect a huge chunk of the stake to be sold further.
Okay, understood. The other question was, Puneet, can you talk about timelines as to when does, this deal get sort of consummated? Because as you said, you will probably have to engage with these sort of lenders, to get these sort of pledge shares and then sell. So what could be the timeline for this?
I think it will be well within August, maybe a couple of weeks. But well within August, we should be able to get it done.
Sure, fair enough. And last question from my side, in terms of priority, if in terms of priority, in terms of sort of, returning the sort of LAS that we have created, will the mutual funds get a priority or will the banks get a priority, if you will be able to disclose that?
I can't comment, Rohit. Until I don't engage with them, I don't have an answer.
Sure, totally appreciate it. Thanks a lot and wish you all the best.
Thank you, Rohit.
Thank you, sir. We have next question from the line of Rajiv Sharma from SBI Cap Securities. Please go ahead.
Yeah, hi, Puneet. Thanks for the opportunity. Just trying to understand that, early this year when we were going ahead with this ZEEL stake sale, we were expecting a lot to come from at least 20%, stake being sold to address the group debt issue. What has changed in terms of, the realization from the non-media assets, which is giving you confidence of, ZEEL only 11% and maybe minuscule in addition?
Well, at that point in time, we were engaging with several parties. Today, for the assets that I just talked about, we have signed deals, although not binding, but they're signed deals in place and due diligence is in advanced stages. That's what gives me the confidence that it will get done. And this announcement itself will release pressure on the promoters, which gives them, little flexibility to negotiate harder.
Okay. That's it from my side. Thank you.
Thank you.
Thank you, sir. We have a next question from the line of Ankur Periwal from Axis Capital. Please go ahead.
Hi, Puneet. Congrats for the deal and thanks for the opportunity. Just one clarification. Now, presuming this stake sale is at 11%, the promoters' stake right now is more like 35.6%. So we will be well below 25%, threshold after this transaction. And you did mention that we may have to top it up in terms of additional ZEEL stake sale. So in that scenario, probably the promoter's holding can go down further. So any thoughts there?
No, you're right, Ankur. And as I said, the priority for the family is to retire the entire loan against shares. And that will take precedence over, whatever we choose to do. While I'm confident that after this entire episode, the promoters will be left with enough shares in ZEEL for them to be motivated and excited to continue running the company with the vigor they've been running so far.
Sure. Secondly, you did mention, the current outstanding debt at 11,000 odd crores. Can you break it up into, the mutual fund and the debt bit? Because there have been multiple numbers floating around. Mutual fund and the bank.
Multiple numbers are floating around, but I don't have it readily available with me. We'll check with corporate and come back to you.
Okay, sure, no worries. And lastly, you did mention, parallel talks with the other interesting investors, maybe international or the financial ones, is still on. So can there be a scenario wherein probably, going ahead, given the strict timelines, while we may not be able to complete the strategic transaction now, but going ahead, there is still a possibility of that thing happening?
Yes, as I said, now it is the dialogues are with financial partners.
Okay, that's helpful. Thank you and all the best. Thanks.
Thank you, sir. We have next question from the line of Vivekanand Subaraman from Ambit Capital. Please go ahead.
Hi, thank you for the opportunity. In November, you had mentioned that you wanted the right global strategic partner and had outlined two considerations, media and tech. How valid are those considerations today, and how will that impact your own thought process with respect to the business and further stake sale?
I think a lot has changed, since we decided in September, October last year, and we had to, put some other priorities up front than just getting the strategic partner in. Those priorities from a business and industry perspective are still relevant, and we'll see how to partner with them going forward. It doesn't have to be only equity-based. It can be even strategic alliances that we can create with them.
All right. Thanks.
Thank you, sir. We have next question from the line of Alankar Garude from Macquarie Capital. Please go ahead.
Hi, Puneet. Congrats on the deal. Just one question from my side. So when you say that the process of repayment will be done by 30th September, are you referring to the entire 11,000 crore amount?
Yes, sir, I am.
And is there any other debt of the promoters other than 11,000 crores?
Opcos, other Opco companies may be having debt, but the promoter debt that's what it is.
Understood, sir. So basically everything is loan against shares?
Largely, yes. Correct.
Okay. That's it from my side. Thanks.
Thank you.
Thank you, sir. We have next question from the line of Naval Seth from Emkay Global. Please go ahead.
Thanks for the opportunity, sir. Question is on, quantum of stake sale. So in November, it was 50% of your holding. So holding has now fallen. Does that 50% still stays, or it will change?
Well, as I said, after the realization of the non-media assets is when we will know how much more we need to sell. Obviously, we want to maximize that the non-media assets realization. So therefore, we have to sell as little as possible of ZEEL, which is our crown jewel. But having said that, our priority is debt repayment. And I am pretty confident that after all these payments, the family will still be left with a significant shareholding, which will at least keep us motivated to work every day.
Okay. And so is my understanding correct, as you stated, that, the remaining stake sale can be announced as soon as August? So now within August, your non-media, stake sale in non-media assets will be earlier than what you will announce in case of ZEEL. As you stated that the stake sale will be dependent on that part as well, right?
No. August is completion of the current transaction that we are doing. I have up to 30th September to repay the balance loan. And that's the time period I'm committing to.
So